When a lot of people are thinking about retirement accounts and, trying to hedge inflation, this might be a question for somebody earlier in the game planning for it, but is there an advantage for having real assets in your portfolio, like homes or apartments and gold bars, commodities, stuff like that? And also to follow up, is it too late to start doing that if you're later in your planning?
Well, really, all of those things are part of your asset allocation. And so they're all driven to give you a potential rate of return, but do it in a different way at a different time than another asset class. For example, dividend paying stocks or value stocks have been doing a little bit better lately, whereas growth stocks really were surging ahead until lately. I'm saying this in July of 2024. Same thing with what you're mentioning about commodities or real estate. It's kind of hard to own real estate in an IRA. It's not impossible, but let's just say you have some rental properties. Well, that could be a good, reliable source of income as long as you have reliable tenants and that isn't too much of a challenge. So that's a reliable cash flow source of income. And as long as you maintain the property, that's good, consistent cash flow. And meanwhile, the asset's still growing. That's different from, say, a bond that's also paying you a good, reliable source of income in a dividend, the interest that the bond issuer is paying you, but they're going to return you your principal at maturity. So your asset's not going to grow in value if we held to maturity, whereas the real estate could be. So could you charge more rent because of inflation? Yes. Could the property go up in value and you want to get out from being a landlord and collecting rent? So there are some advantages to doing those types of things. Meanwhile, you're spinning off some income. That's different from, say, being in the traditional, let's call stock, bond, and cash environment where your stocks are growing, you're selling some of that gain or growth, maybe putting it into bonds to get a little bit of interest or dividend in that nearer to 3-year time horizon, and then cash might be the money that you're spending right now or this year and the next 12 months. So those are just different ways for you to manage cash flow and the growth of assets. And what's good for the stock market and good for the bond market isn't necessarily at the same time what's good for the real estate market and vice versa. So those are just ways to diversify your assets to get an opportunity over time. But I think all of your investments are expected to deliver an anticipated reasonable rate of return over time. And so stocks would be expected over time to outperform bonds. Bonds would be expected to be less volatile and more predictable in the short run, but are likely to pay us less and do less battle against inflation. Real estate is going to be maybe a little bit of both, and that's what creates an opportunity there. But there's a lot to owning real estate, that requires more work than just putting investments in an account. So I'd be cautious with that, but it certainly creates an opportunity. If our conversation resonates with you and you'd like to have a conversation about your specific situation, come to goodfinancial.com and click Contact Us, and we're always happy to start a conversation to help you prepare for your financial future.